If you're over 60, 2026 could become one of the most important years for your retirement strategy. While many people are overwhelmed by the flood of new retirement rules, I've been digging through the changes to uncover the opportunities hidden inside them. In this video, I'll show you 3 powerful leverage points that could help you keep more of your money: a new senior tax deduction that may put thousands back in your pocket, updated retirement contribution rules that can strengthen your savings, and smart Roth strategies that could protect your future income from unnecessary taxes. These changes are confusing, but you don't need to figure them out alone. Stay with me until the end, and I'll break down exactly how these 2026 rules can work in your favor. And if you want clear retirement updates explained simply, subscribe to the channel. Look, I know the headlines around retirement in 2026 can feel overwhelming. Every week there seems to be another announcement, another rule change, or another number that makes you wonder, how is this going to affect my money? But after digging through these changes, there is something important you need to understand. These new rules are not just obstacles. They also create opportunities for retirees who know how to use them. For example, Social Security recipients are seeing a 2.8% COLA increase in 2026. On paper, that sounds like good news. Your monthly benefit is going up. But here is where many retirees are frustrated. At the same time, some of the biggest expenses you face are also increasing. One of the biggest examples is Medicare. The standard Part B premium is increasing to $202.90 per month, which is deducted directly from many Social Security checks. So while your benefit may be rising, more of that money may be going right back out before it ever reaches your bank account. And this is why retirement planning in 2026 is changing. It is no longer just about how much money you saved. It is about understanding how money moves through the system, how your income affects your taxes, and how certain decisions can trigger costs you may not see coming. One of the biggest concerns retirees are facing is what many people call the subsidy cliff, or income cliff. This is the situation where earning or withdrawing slightly more money can push you into a higher cost bracket, causing unexpected increases in healthcare premiums or reducing valuable tax benefits. Many retirees think, if I have more income, that must always be better. But in retirement, the picture is more complicated. Sometimes earning a little more can mean paying significantly more. Sometimes taking a larger withdrawal at the wrong time can increase your taxes. And sometimes a simple planning decision can determine whether you keep more of your retirement income or send more of it toward unnecessary costs. That is why the smartest retirees in 2026 are not just asking, how can I make more money? They are asking, how can I make the money I already have work more efficiently? And that is where these new retirement rules create opportunities. I've been going through the details so you don't have to, and there are 3 major leverage points every senior should understand. The first opportunity comes from the new $6,000 senior tax deduction created under the One Big Beautiful Bill Act. If you are age 65 or older and qualify, this deduction can potentially reduce your taxable income while stacking on top of other existing deductions. That means this is not simply a small tax adjustment. It can become a powerful tool for protecting more of your retirement income. For some retirees, lowering taxable income can also help manage exposure to other income-based costs, including Medicare premium adjustments. The key is understanding that taxes are not only about what you pay today. They can also affect what you pay for other parts of retirement tomorrow. The second opportunity is the new super catch-up contribution option for certain workers between ages 60 and 63. If you are still working and trying to strengthen your retirement position, these higher contribution limits can provide a unique opportunity to put more money into your retirement accounts during these important final working years. This is not just about saving more. It is about creating a larger shield against future taxes while you still have control over your income. Many people wait until retirement to think about tax planning. But the years before retirement can be some of the most valuable years to make strategic moves. And the third opportunity is what I call the Roth pivot. For higher earners, especially those earning above certain thresholds, retirement contribution rules are changing. Some catch-up contributions must now go into Roth accounts instead of traditional pre-tax accounts. At first, some people may see this as a disadvantage because they lose the immediate tax deduction. But there is another way to look at it. You are choosing to pay taxes while you still have control over the decision, with the goal of creating more tax-free income later in life. Imagine reaching your 80s and having a portion of your retirement savings that can be accessed without worrying about additional income taxes. That is the power of strategic Roth planning. You are no longer simply saving for retirement. You are building a tax-efficient retirement system. And that is the biggest lesson from these 2026 changes. The people who benefit the most will not necessarily be the ones with the biggest retirement accounts. They will be the ones who understand the rules, plan ahead, and make their money work within the system instead of reacting after problems appear. Because retirement security today is not just about having enough money. It is about protecting what you have already built. The bottom line is simple. 2026 rules favor those who plan, not those who panic. The goal is not to chase every new opportunity or make complicated financial moves. The goal is to understand how these changes affect your taxes, your healthcare costs, and your retirement income so you can make smarter decisions. If you want more videos where I break down these retirement changes in plain English and help you understand how they may affect your situation, make sure you subscribe to the channel. And I want to hear from you. What concerns you the most about the 2026 retirement changes? Is it Social Security, Medicare costs, or taxes in retirement? Leave a comment below, share this video with someone who needs to see it, and make sure you like this video so more retirees can find these important updates. I'll continue watching these changes and breaking them down for you, because protecting your retirement starts with understanding the rules.